Hello and welcome back to another week of your Mortgage Market Movers Weekly, where we are detailing everything that's going on in the macroeconomy to help you make better home buying decisions. As you can see, we are in a new space. My apologies for not being here last week, but I was moving the Mortgage Market Movers Weekly HQ, and here we are. So, to get you caught up, the 30-year fix looks like it is diving off a cliff. It is sitting at 6.67 as of last week, and I mean we've come a long ways now. Back in January, I believe it was in the low 7s, so 6.67. Hopefully it keeps coming down. We're gonna get you caught up with everything that's been going on in the mortgage world when we get over to the charts. So let's get on over. We're looking at the U.S. 10-year. And if this is your first time tuning in, this is what we use as a proxy for the 30-year fixed. It is not the 30-year fixed, though. Like I said in the intro, it looked like the rates had been falling off a cliff. And what I mean by that is if we see day after day, it just looked like rates were coming down, 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 down. That means that people were buying into the bond market, and we can pull up to compare right here. So yeah, so we see a lot of buying activity into the bond market. When bonds go up, rates come down, and vice versa. And let's see, so I want to say that 6.67 rate was from Thursday. So rates were even lower July 1st. And as we've progressed from July 1st to what would be today, that's for Tuesday, but Monday, July 7th, rates have been coming up a little bit. I wouldn't be too worried about that. I mean, for such a long time, we were kind of up, down, up, down, up, down. Rates finally came down. And I know today in the U.S. stock market, the market as a whole wasn't doing too hot. I believe that Trump had discussed tariffs again, and the tariff talk, which isn't as big of a deal as it used to be. You know, when tariffs were announced, I want to say it was, I think Trump called it Liberation Day. That was back in April. I think that was down here, and people really bought into these bonds, and that's when rates got real low. But lately, the market has been on a rip, and it's been doing super well. So that applies for the U.S. stock market as well as the bond market. We can kind of expect a little bit of a pullback, and we saw that in the stock market today, so we can expect that in the bond market here. So I wouldn't be too worried about that. Last week, we had a lot of job data. So we had, let's see, whenever Powell speaks, that's always a big deal. I did not catch this on July 1st, so I did not watch that. I'm not sure exactly what happened, but nothing earth-shattering occurred. Market did not tank. In fact, it's like I said, it's been doing super well, the U.S. stock market. This JOLTS job openings, it looks like there were more job openings. And then when we look at the unemployment rate, that is a 4.1%, which is down. Let's see, I want to say this is, monthly. That is down from last month's 4.2%. It was expected to be 4.3%. When we look at the non-farm employment change, it looks like more people are getting jobs. There's change in the number of employed people, 147,000 compared to an estimated 111,000. So really good job data. The only thing that wasn't too hot is this average hourly earnings. It looks like earnings are not keeping up with how many jobs are being added and taken up. So, give the people more money, right? Let's see. When we look at this week, really not much is going on at all. We have the 10-year bond auction, which that is Wednesday, July 9th at 1:01 p.m. And that will be important. The 10-year bond rates are based off of the 10-year yield. So saying the 10-year bond auction, that's going to be important for us. Other than that, it's really not too much. I mean, unemployment claims, the 30-year bond auction, not not anything crazy. Like I said, rates have just been coming down, 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 down. We can expect this week when the numbers come out, this Thursday, I would expect them to come up a little bit from here, but I wouldn't be too frightened. Back in January, like I said, it was 7.04, went all the way down to 6.63. So hopefully we can have that come down. I mean, when we just look at, let's see, I don't want to look there. We'll look from this point, January. Comes up, and then comes down. So let's keep an eye on that. But it looks like rates will either probably settle around here, or I would expect that they could come down just a hair. But, these are always just predictions, and they are never guarantees. And the market will do what the market will do. All right. That's about it for this week. We didn't have a ton going on, so I guess it wasn't that big of a deal that I missed last week. But, yeah. If anyone has any mortgage questions, definitely reach out to Mortgages by Linda at 877-TEAM-MBL or visit us at www.mortgagesbylinda.com. Have a great week.